But basically, we just wanted to deal with certain questions that normally people ask. That do you really think that everybody has the ability to trade? Well, I think trading is basically for everyone. I mean, trading has basically been one part of our lives. We do trade all the time, and I think trading on a digital or virtual format is a little bit complicated than in normal physical bricks and mortar style. It's just a different way of saying just because I can trade in the physical side, again I can trade in the digital side. That's basically another way of saying it. So, well, with trading, you basically you essentially need a script, which is more or less like your reference to, and you need an exchange, which is more or less like the market where you can buy and sell a given asset. By buying and selling decisions are influenced by the direction or the data that you can gather from the script, and this is what I chip in Market Cipher, which is my reference script of trading. Market Cipher is arguably, um, without a doubt, is just unarguably sorry, without a doubt, is just the best or the leading indicator. I think this is the essential or the accurate indicator that everybody can literally understand easily. It's like it's the best way of trading. You don't really need any other supplementary indicators to support your trading decisions. All you require is just, and I don't want to sound like I'm just trying to advertise or sell something to you, but if something works, it really works. Had it not been market server, I think I wouldn't have problem had an interest in trading because it just simplifies everything for you in two given structures. The very top element or the very first structure I want to talk about is market cipher A, which is a structure of indicators. Indicators are basically what I use. No, normally I also refer to indicators as road signs. So basically, market cipher A is made up of road signs. These are your road signs. So trading now becomes more or less like traveling. You are traveling and you are using road signs as your navigation, supplementary navigation assistant tool, or you just refer to it to know if there is an upcoming traffic or just you navigate your way out through your journey. So these are clusters of diamonds. We have the green dots, you have these clusters of diamonds, and you have the red diamond clusters of diamonds. These are basically different varieties of road signs. So you can have your sharp curve, you can have your 10 kilometers of ahead road sign, you can also have um let me see a roundabout. All these are varieties, all these are varieties, all these are varieties, these are varieties of road signs. So all of them influence your trading decisions. You can literally trade using these signals as your reference indicator or your road sign indicator. But normally, the question I ask is, do you really think these road signs are enough data for you to peg your trading decisions out? Do you think these are essentially all what you need? If all what I need to trade was just this black diamond 10 red and I trade, if this was only the rational or the logical reason for me to base my whole to base my trading decisions, is that's the question I'm trying to ask. Do you think it's enough for me to base my trading decisions primarily on just these single road signs? If that was the case, why is it that so many people are not making right trades? Because these are just a fragment of data. These are basically pieces of data, and they don't have massive influence on the direction of price. For my candlesticks to go upwards, these data are not enough for them to influence the very direction of these candlesticks. You remember these candlesticks moves And we have three price actions in trading. We have the uptrend, we have the downtrend, and have the consolidation. So in other words, price either moves upwards or either moves downwards, or it consolidates like this. Makes sense? So do you really think this diamond, or this blood diamond, or these clusters of diamonds are enough for me to base my whole trading decisions on? Like, that's not enough. So that's when I introduce what we call my Google Maps. You see, these are waves. These are basically waves because they move upwards and come downwards. These are all waves, and we have different varieties of waves. Same way I can say we have different varieties of Google Maps. And this is what I call the influential oscillators, always, because they have massive influence on the direction of price. Price responds to majority of these directions of these oscillators, and that's where market cipher makes it much more simpler by understanding the direction. Once you can extract the direction of an asset, it means that asset either trades upwards or downwards, and you can use your road signs as a supportive, supplementary, assistive indicator to base your trading decision, but not your ultimate determinant of your trading. In other words, these are just assistive, supplementary indicators. Your entire trading decisions responds heavily with these directions. If it's going up, RSIs are going up, momentum is going up, it means we have to long because we are in the positive territories. If the same way all these assets are coming down, sorry, all these oscillators always are coming down, the majority of them are coming down, it means we have three major oscillators heading towards the downward territories. It means we have to short or sell, basically. So then trading now becomes direction. It becomes direction, not indicators or road signs. So direction, because evidently price either moves upwards, downwards, or consolidates. Price always responds to these upward movements and downward movements and consolidation, and these are also movements. These are oscillators, they are waves, they move. Then you can now refer to your indicators as your supplementary reference to aid you in your trading decisions. Okay, I saw a major downwards, fine, we registered a red diamond, price fell. Again, we saw a green dot, money wave, money flow was heading towards upward, momentum was heading toward upward, RSI was heading toward upwards, so price eventually rose. Then again, we registered a blood diamond and the price also fell. We registered a red blood dot here on our momentum wave. Momentum came down, VWAP came down, money flow came up, and price fell. We can do this in hindsight, but the question is, in foresight, how do you trade? And I can answer this in my course. I do have a course in the pipeline, and when it's ready, I'll let you guys know. And basically, trading is a direction, not necessarily a signals and indicators. So I wouldn't want to take much of your time. I always want to keep it simple and short. So have a nice time.